May 17th, 2011 meeting of the Finance Committee of the City of Santa Barbara. Mr. Samario, what's on the docket today?
Thank you, Mr. Chair, members of the committee. We have really just one item today related to the 2012 recommended budget, although it's really a discussion that could occur anytime in any context, and it has to do with the citywide reserves. So we wanted to just kind of give you some background as to how we developed the policies, although I wasn't here at the time, but it was about 9 months after I got here. But some of the underlying considerations as to how the policies were set, why they were set at what levels they are, and then actually go through the policy itself. I've given you a copy of the policy, the resolution that was adopted in 1995 that established these reserve policies after a series of meetings and work sessions with the council. And then we'll look at the actual reserves for the general fund and all the enterprise funds and internal service funds as of June 30, 2010.
Great.
So just again, as I mentioned, wanted to start off with just some of the background as to how we got to the policies that we have. And some of this is based on discussions I've had with city staff. This was, again, about 9 months before I got here, but in talking with Mr. Pearson, my predecessor, and the previous city administrator over the last number of years. This is what really were some of the key considerations that went into the policy that was adopted in 1995. One is that the recognition that the city was susceptible to natural disasters. There was one, in fact, in 1995, the year this policy was established, there was a major flooding that occurred that created substantial damage and loss to the city. And so I think that was part of the context. And so whether it be earthquakes or floods or tsunamis, we obviously in an area where we are susceptible to natural disasters. And we're also susceptible to major economic swings, and that was really a key consideration in terms of, at least in part, in setting the percentage or the amount of reserves that we would need. Because if you're a bedroom community with your revenues being pretty stable, you know, that would be a different consideration than if you're a city like Santa Barbara or Santa Monica, where you're more susceptible to economic impacts because we rely on tourism. And just the impacts of natural disaster not only include just the cost to respond to that emergency, extraordinary cost, but it also result in a loss of revenues. If we had a natural disaster, a major earthquake, for example, people wouldn't be coming here to stay in the hotels and spending money at the restaurants, have a significant impact on our bed tax and our sales tax revenues. So we recognize those two things would be occurring simultaneously. And then also recognizing that while we might have other funding sources that would be coming in, whether it be insurance proceeds, because we do have insurance for such disasters, they'd be slow to come, and they wouldn't necessarily cover all of our costs. We have deductibles in our insurance that are pretty substantial, particularly for earthquake. But also with FEMA or CalFEMA, if we are determined to be in a disaster area, those funds don't always cover 100%, and they only cover a certain percentage of what are considered eligible costs. And those funds also would be slow in coming. And I think one of the things they kind of landed on was that they, in total, using the two reserve pots that we'll talk about, that they wanted to establish 3 months of funding for operating expenditures. You know, you've heard of financial advisors tell you should have 6 months of money in reserves, you know, of your income in reserves. They landed on 3 months or 25%. That's where the number came from. But recognizing that one of those pots was for budgetary reasons, that you may have to dip into that, and you may not have 25% to 3 months, but that was at least the goal. And then the other final consideration was that the reserves that we have established are not just in the general fund, but are also in our enterprise funds, so that we have a larger pool of resources citywide to draw upon if we have a disaster. For example, we have a disaster that particularly afflicts general fund facilities, not necessarily enterprise funds facilities. We could borrow funds from our enterprise funds if needed to respond until we get money reimbursed from either FEMA, CalFEMA, or from our insurance. So that's was another consideration. So as I mentioned, I've given you a copy of the resolution, and if you wanted to go through that in more detail, this is a summary of that policy. And it set 3 pots of money. The first was for disasters, emergencies. And what's interesting is if you look at the actual policy, the first one is actually defined as a reserve for economic uncertainty or contingencies / emergencies, although we've sort of kind of look at it more as a disaster reserve. And when you look at the definition of it, it speaks or sounds more like a disaster reserve. It's set at 15% of the operating budget, and it is designed to cover lost revenues and extraordinary costs during a major disaster, as I just explained. The reserve for future years' budgets, kind of an unusual name for that. I think the intent based when you look at the language, it really to address periods of where we have to make cuts and to provide for an orderly transition of having to reduce our budgets, presumably because of lost revenues or declining revenues. So I think it speaks more to an economic contingency reserve than anything else, so that if we have periods of lost revenues, because we are susceptible to that we would be able to transition down to a smaller budget by using reserves sparingly. And you've seen that in the last 10 years. We've had to do that in 2002. We did use some reserves for a soft landing, as we thought we would become back, as the economy did in fact recover to some extent before the most recent recession. The reserve for capital, it's $1 million flat for the general fund, and that's because in the general fund we don't have really a substantial capital infrastructure program. It's mostly in the enterprise funds where you see that. It was just, I think, initially designed to just cover cost overruns for any particular capital project. We've never used that reserve, and since I've been here, it's always been $1 million. And even though we've had capital project overruns for general fund projects, never have used it. It's just come from other reserves. But in the enterprise fund, it's substantially more. There are two approaches or methods by which we establish these reserves. One is it's either or. It's 5% of the net book value of capital assets, and the net book value represents what we paid for it minus the accumulated depreciation. So we have a 10-year facility with a 20-year life. 50% of that facility will have been depreciated at 10 years, and so it's measured on the net book value. But what we traditionally use more than that is looking at the last 3 to 5 years, what's been their capital program funding, and we take an average of that, and that's what we establish as their reserve requirement for capital. And in some cases, as you'll see, it's a pretty large number. And generally speaking, those reserves aren't meant to be spent. They're, again, for uncertainties, and more recently we have spent some of those, but all of these funds are not designed to be spent except for unusual circumstances. I see a question coming.
Thank you, Bob. I just don't understand that last.
Sure.
I need to sort of.
Sure.
Okay.
So reserve for capital.
Okay. 5-year average of capital.
We look
program.
for. Let's take for example the water fund.
Okay.
We look at the last 5 years of their capital program funding, and it's generally around $4 to $5 million.
Okay.
That's how much they spend each year or fund each year toward their capital. And so we take an average of the previous 5 years and say that's the amount of money they should have set up as a reserve for capital. That's how we calculate that number.
All right. Thank you.
And then other policy considerations or requirements that pursuant to that resolution is that all the use of reserves require council approval. Of course, that always occurs. And that the use of reserves should be accompanied by a plan for the replenishment within a reasonable period of time. And it doesn't speak to the formality of that plan. It just speaks to the fact that you should have something, some plan in mind, at least for the future, to be able to replenish those reserves to the extent they are used. So any questions on that before I go on to the actual reserves? Mr. White?
I would, that last little piece there is kind of speaking to what I've been struggling with, of trying to figure out how the reserves were depleted and what kind of plans there were for replenishing that. So, and that's something that I would like to just have a good conversation about, because I feel like my gut feeling is that we used up some reserves in good years. And that's true. So that's just, I'm trying to find a way to make that maybe more visible or maybe more difficult. I mean, I appreciate you don't want to just tie everybody's hands with the use of money, but that's the area where that one little line is the area of concern that had me asking our staff about the reserve policy and how do we do better next time with that issue.
Well, Mr. White, I think you're you're pointing out an essential feature of this policy. The policy talks about establishing reserves. It says nothing about using reserves.
Okay. So
And that I think will be a topic of discussion, needs to be
Good.
a topic
Well,
of
that's-
discussion.
right.
Yes.
All right.
Okay.
A lot of numbers. Let me just first orientate you to the schedule and what it intends to do or show. On the left, you'll see the various categories of funds, and even though we have just one general fund, what I've included in the general fund in total is our general plan update. We've created a fund which is really being paid for, those costs out of the general fund as essentially a loan, a long-term loan to be repaid for by fees that are being charged by the Community Development Department, and it'll be repaid over a period of 20 to 25 years. But in any case, on the far left, general fund includes the general fund that we know it, as plus the GPU fund. And then you'll see all the enterprise funds, and then followed by the internal service funds. And one thing you'll notice in the internal service funds is that there aren't any policy reserves, which are the first three columns for disasters, future years budget, and capital, because the reserve policies don't apply to internal service funds, only to the general fund and the enterprise funds. So you have your disaster reserves of 15%, 10% for future years budget and the capital, and any other reserves that have been established pursuant to city policy or direction, and then a total column. And so that's sort of what's required. But then you'll look at the next column, which are the actual reserves that this individual funds have, and then to the right, whether they're above that amount or below that. And I also added a column because I think it's relevant, since this is measuring as of June 30, 2010, on that day. We know that when we adopt the budget for fiscal year 2011, the current year, there's potentially some use of reserves that are budgeted. And so to give you a real true picture, a truer picture at least, of what the reserve levels are, we wanted to show that. I wanted to show that that use of reserves that's planned for this year. We also, as you know, for next year have some additional use of reserves, but I think that was going too far. So we'll just start with the general fund first, and you'll see that what is required per the city policy is that that it have a disaster reserve of $15,182,000. So it tells you we have a budget of about $102 million, and that's based on the following year's adopted budget. So as of June 30, 2010, it's based on the adopted budget that was effective July 1, 2010, fiscal year 2011. It doesn't look to make changes when there are amendments to the budget. It's strictly the adopted budget. The future year's budget at 10% or $10 million is what's required by the policy, and the capital is $1 million. So in total, we're supposed to have $26.3 million, but in reality, we have $19 million in the general fund, and therefore we have a shortfall of $7.3 million. And that shortfall is attributed to the future year's budget amount. It doesn't come, I think there is a sense of kind of order and where those monies come from, and they would first come from the future year's budget, then capital, and then the disaster reserve. So that $7.3 million shortfall is attributable to the middle column of what's required. And then you can see the cumulative costs. There aren't obviously any policy requirements for the GPU fund, but the cumulative costs that have been incurred to date have been about $2.1 million, essentially funded out of general fund reserves as kind of a loan. And so you see that the general fund in total is short in what it needs or should have by about $9.3 million, almost 9.4, which is not a major change from what it was last year, about the same in terms of what the shortfall was. Any questions on the general fund portion?
I
Mr. White?
don't quite get that the $2 million was loaned to the general plan update. So did that come out of the $10 million that out of the rainy day reserves? So that used to be that was $12 million, shall we? I mean, not $12 million, but because now we only have $1 million left in it. But it was part of the $10 million that was at one point in that reserve. $2 million of it were taken out and allocated for the general plan update. Is that the process
Mr. Chairman,
that occurred?
Committee Member White, that is correct. It was funded. It was always intended to be funded by the general fund. That effort had no funding sources other than the general fund, so we just created a separate, fund, if you will, where we would incur those costs, and to the extent that it incurred costs, it created a deficit which is covered by the general fund's reserves. And so cumulatively over the last 4 or 5 years, during the period of time that this occurred, there was an expenditure of $2.1 million for that effort, all coming from that middle column, the future year's budget reserve, which is supposed to be at 10%.
Okay. I have a question. So was there a council resolution, or how did that policy happen?
Yeah, there was, Mr. Chair, there was a council action, and I'm a little fuzzy on the actual details, but council action that approved that it be funded out of the general fund. At that time, I think we had reserves above policy when that decision was made. That's my guess, because I think it occurred starting back in 2006. So I know we had at least, we were fully funded at least by that point. So it was a council action that said this is the plan of funding that effort.
Okay. I'd like to get the actual
Sure, absolutely.
information. Yeah. Thank you.
And I'm not, I'm a seat of the pants accountant, not a formally trained one. And I look at that, I almost think of that as being double counted, the 7-2 and the 2-1 in the under policy column there. It's almost as if, if they took $2 million out of the 10-1, let's just say that you say it was on policy at one point. You take 2 out of that, then wouldn't you only count it once in the deficit column?
Yeah.
Am I making myself
Yeah, no,
something
you make
near
yourself
clear?
clear. It's a good question. So the far left column, or the column to the left that says future year's budget 10%, $10 million, that's just the amount that we should have in the bank for that reserve.
Right.
To the right, it shows you what the actual reserves are. In the general fund, for example, there are in fact $19 million in reserves. Right. But in the GPU fund, there has no reserves. In fact, there's a negative reserve balance of $2.1 million, and the only source of that is from the general fund. So, to me, it's just we're attributing that $2 million negative number to the future year's budget because that's where it should come from, and it just adds to the shortfall of $7.3 million. So it's not being double counted. You have to just trust me on that. But I know, but in total, that's where it's coming from, and our shortfall is $9.3 million in total. Okay, so okay to move on. Enterprise funds. So the enterprise funds, obviously, the same calculation we used the fiscal 2011 adopted budget to establish those amounts for required reserves, 15, 10, and you can see capital being substantially more, as I kind of mentioned before. The water fund, their capital program is pretty extensive on an annual basis, and that $5.1 million represents the average of the last 5 years' capital program funding. And so in total, they have reserves of $11.7 million, and you can see that they actually have more than that in terms of actual reserves. So those reserves are fully funded and have reserves above policy of $3.4 million, which is the second column from the end. And for 2011, the current year, they've only proposed to use about $18,000 in reserves. I'm not sure why it's such a small amount, but so they're fully funded and have extra. I know that in 2012, they're going to probably use a fair amount. So it still doesn't give you a complete picture, but at least through the current year, it gives you a pretty good picture. Wastewater, you'll see that while they had reserves above policy as of June 30 of almost $1.8 million, they planned and budgeted the use of $3.7 million this year, some of it by design, for the replacement program. And this is the year where we didn't raise rates as we thought we needed, and so we ended up having to dip into reserves, at least on a budgetary basis, in this current year. So they will be falling below policy, at least on a budgetary basis, although I know from talking to Ms. Bjork that they expect their expenditures to come under budget sufficiently to keep their funds, their reserves fully funded by the end of this year, although they may dip into it next year. In downtown parking, their reserves are in good shape, fully funded, with reserves above policy requirements of $2.7 million. Similarly, with the year, and their use of reserves for this year are about $500,000, so they're still above policy. And really, It's the same story with all of them, except when you look down to the golf course, the third from the last line, you can see that they are definitely under policy amounts. They are actually in total underwater effectively, at least on in terms of how we measured it as of June 30, 85,850. They were in the negative, in the red. But fortunately, and because they didn't have them, they didn't budget any use of reserves in 2011. But I just wanted to point out, a couple things that looking at the totals for the enterprise funds, you can see we have a total of $29.5 million in policy reserves just within the enterprise funds, a combination of disaster reserves, future years budget, and so forth. So, a fair amount of money that's available in enterprise funds for whatever purpose, whether it be disasters or any economic impacts. Down below, the internal service funds, as I mentioned, there are no policy reserve requirements as described in the policy, but there are still reserves that are established in those funds, particularly those that are capital intensive. The first is the Intra-City Services Fund. That's facilities essentially, and those reserves that are established at $2.3 million are for facilities because it's a capital, a lot of capital expenditures don't always occur same every year. Sometimes they build up reserves to do certain projects, so they tend to have reserves, and then they spend a big portion of those in a particular year, and then they try to reestablish reserves. Similarly, with the fleet replacement program, $4.5 million in reserves. Most of that reserve is for, not just for vehicle replacement, but for enterprise funds. It's attributable to the portions where enterprise funds have paid in, and those monies have been accumulated for their vehicles. So about 30 to 40% it relates to the general fund piece of that vehicle replacement program. The fleet or vehicle maintenance program has a small reserve balance of about $365,000. That's just a small operating reserve. It's not necessarily, it's not for capital, of course, but just because to have some cushion. Next, the self-insurance fund, substantial reserves, no reserve requirements, but $4.5 million reserves that were available. As you know, for 2012, we planned and have budgeted or at least proposed to use virtually all of those extra monies that are available in that fund.
Refresh my memory on what the extra money, the definition of extra money is.
Yes.
I do.
The extra money in that fund, the self-insurance fund, it accounts for all of essentially our insurance program, workers' comp, liability, and the way that fund is funded is essentially through insurance premiums charged to all departments and all funds, and we collect those on an annual basis. And the amount of premiums that we collect are based on an actuarial study that's done every 2 years that says this is how much money we're going to need this year or next year to fund all of our claims. They also tell us how much money we should have in the bank to pay ultimately for all the claims that are outstanding, whether they be liability claims, meaning trips and falls, or workers' comp claims. And that number, as we talked about before, has gone down substantially. It used to be at $1.10 million that said we had to have in the bank. It's now closer to $6 million, and that's where we create that difference, that excess. And then the last one, information systems, they have a small reserve because they replace equipment not on an annual basis completely, but periodically, whether it be network infrastructure or just even PCs. So they have essentially a capital replacement plan whereby they accumulate monies every year, and then every 2 or 3 years, then they spend a fair portion of those, and that's what those reserves represent. So, you can see citywide totals. We have $25 million, 25.6 available citywide for disasters, 17.1 for future year's budget. Again, all of it's available sort of for disasters if necessary to the extent they're there. 13 million for capital, and an additional $7.7 million for other purposes. So a total of $63 million. In actual reserves, more than that, $73.3 million. So that's a look at our reserves citywide. It was just kind of for informational purposes only. It's something we do every year to just bring reserve balances, and so I'd be happy to answer any questions.
Any questions, Mr. White?
Well, maybe this would be might help me track how the process occurred. The golf fund is obviously struggling, and at one point were they fully funded with their reserves at one point, and then how did they all go away? And did they all go away under a pattern that is consistent with policy? Or what were they used for a more ambitious capital program, perhaps, than was consistent with the capital reserves?
Mr. Chair, Committee Member White, the use of the first question and the first answer is that they were at one time fully funded in their reserves. So they at one point had roughly, you can see there what's required, somewhere in the order of $500,000 to $600,000 in reserves. And that's based on about a $2 million budget. And since I've been here, they've always been fully funded until recently. And the use of their reserves were in part by design and in part because of the economic impacts. They recognized that they needed to make some improvements to the golf course that were both for safety purposes but also just playability of the course that they would hope would, on a long-term basis, generate more revenue through more people playing the course. And so they had planned, and council approved the use of reserves, part of the reserves, primarily the capital reserves, to fund some of these improvements. Part of them were also funded through a loan from the general fund of, I think, about $500,000. So they wanted not to be able to, they didn't want to obviously consume all the reserves. They wanted to consume the capital portion and then borrow some money from the general fund to fund these improvements that were unusual in terms of nature because this would not occur every 5 years. It's really a 10-year sort of investment, or maybe longer. So the problem is that the economy was really impacting them, and then the rounds were going down, revenues were going down. So while we were hoping through raising rates and making the adjustments that they would generate the revenues to cover the costs, it didn't occur. And so over the last couple of years, their costs outpaced their revenues, and they ended up having to use reserves that were really for disasters in future years' budget. So part of it was design, part of it was just the impact of loss in revenues.
So the disaster reserves ended up being used to cover costs, which were not a disaster. It was just...
That is correct.
So it's almost like a downgrade of the use of the money. I would picture the budgetary reserves being used for bad economic times, and then whereas now were those used for capital purposes to make it a nicer course?
The use of the capital reserves, and it's not going to be exactly precise as this is the only portion that was used for the capital, but I know in totality a good portion of it was used to make improvements that were hopefully going to be, for sure, make the course nicer, but address other issues, drainage issues. But the idea was that it'd be a nicer course, and it is a nicer course, and,
Sure.
and hopefully draw more people in, create more revenue stream, help to replenish those reserves.
Yeah.
Mr. Armstrong.
And part of the situation of the Golf Fund is we did an analysis of the golf course, and they were looking at improvements. We were having balls leaving one fairway and going into another and hitting people. And so part of this was a safety analysis that was done by a golf course expert and said you really need to do certain improvements. And they were, I think, $1.5 million. And we looked and we said, okay, do we go out and do a bond issue for that? And for that relatively small amount of money, it didn't make sense to do the financing. And so we kind of cobbled together this where we were going to use reserves and a loan from the general fund. And then unfortunately the perfect storm hit, and we did all of those things, and then the economy dropped. And then, as you know, then we also decided to do the creek improvements there at the same time.
That's right.
And then we had some problems with the creek improvements where it delayed the project, an extra 3 or 4 months, which affected play. And so we had this confluence of the economy, the improvements taking longer, and then we were already projecting to use reserves. And so all that kind of came together, unfortunately.
Right. Great. Thank you. And thank you.
Any other questions?
Well, I mean, we're just kind of starting freewheeling here. I want to hear what you have to say.
Well, we'll go to comments in a moment.
Okay.
I'll open it to public comment. Any members of the public wishing to speak to this agenda item? Please come to the lectern and state your name, or come to the microphone.
My name is Terry Tyler, And I do have a question relative to what Mr. White began to address, and that is the need to plan to replenish the reserves within a reasonable time. My question is there such a plan in place? And if so, what is the plan? This is in regard to the general fund reserves.
Thank you. Mr. Samario, any comments on that?
Sure, Mr. Chairman, Committee Member White. As I said, the plan to restore the reserves are not any kind of formal document or anything we've written up, but the intention was that we recognize that the economy does go in cycles, and that at some point we are going to see our revenues start to grow to what we have seen in the past, and then we would be looking to, at that point, if to the extent we can generate surpluses, in revenues particularly, and savings on the expenditure side, to use those surpluses to start restoring our reserves. But it's really going to be obviously a council, direction and action for us to do that. But it's going to require that we have some surpluses, to begin with. And obviously we don't have anything in the near future that's suggests we're going to have major surpluses. But that would be the longer term plan. The economy's going to turn around at some point, and then at that point we're going to be able in a position to say, here, what are we going to do with these extra monies? More programs and services, or restore reserves? And that's really a policy decision of council.
Okay. Thank you, Mr. Samario.
My question is
Could you please state your name?
Oh,
for the
yes. My
record?
name is Jeff Bard, and I'm here as a private citizen. And my question or concern regards the establishment of the 15% disaster reserve level. And I must admit I dropped out of accounting when I was in college because I was just after the concepts and there was too much homework. But it's my thinking after studying disasters and disaster planning over recent years, having lived through many disasters in Santa Barbara, that the 15% is possibly something established by a bunch of accountants in Chicago or someplace. And I'm wondering if there's any thought or any body of opinion that the reserve levels should be studied more carefully, both in terms of, A, the actual anticipated possible expenditures, and B, the likelihood of specific disaster types. And it seems that there should be spreadsheets with sensitivity analysis keyed to the known or anticipated likelihood of these scenarios. And I'm just wondering if the art of municipal budgeting, has reached that point, or if there's a school of thought that's actually applying those kinds of, finer nuances. Thank you.
Thank you. Mr. Samario, anything to say on that topic?
Not a lot. I think, as I said, the basis for establishing the reserves of 25%, it wasn't a scientific approach, but I know one of the things they wanted to they consider all the things that we talked about, but in the end, what they wanted to land on is having 3 months of expenditures, operating expenditures in the bank, and that's why they made it a percentage of the budget rather than a fixed amount, because they recognize that as the budget grows, so do their expenditure requirements. The things that I think that were also considered, as I mentioned, is that we do have insurance for disasters, whether it be earthquakes or floods. It certainly doesn't cover all of our facilities, but it does cover the major facilities and most of them, and there will be some deductible, but to the extent we come short, then that's where we're hoping that FEMA or CalEMA would jump in and cover the difference. We do have reserves available across all other funds that we need, so our pool of resources are pretty substantial. If in a hardship case, we could borrow from a bank on a short-term basis. But no, we didn't use any particular scientific approach to determine what those levels should be. I know that there was a study later on after the policy was adopted, and they looked at a report that was done by Moody's, which is a rating agency that did a survey of all California cities to say what kind of reserve requirements or policies do you have in place. And one of the conclusions was that one size does not fit all. That it just depends on the type of city, the nature of the city, their aversion to risk. As I mentioned before, I think a city that's a bedroom community would probably need less reserves than we do. The size of the city will have an impact. I can't imagine the city of LA having 25% of their operating budget in reserves, because that'd be a huge amount, billions of dollars. Whereas a smaller city, maybe $10 million budget, might want to have 50, 60% of their budget in a reserve. So again, those factors as well as volatility of revenues are all relevant, but those are just considerations in a broad sense that were considered, but they're at least factored into it. But that's as far as I think it went.
Thank you, Mr. Samario. I'll now close public comment and bring it back to the committee for discussion. And maybe I'll start off saying that I think it would be valuable for the full council to review the reserve policy. And what I would like to see, as I mentioned earlier, the existing reserve policy talks about the amount of reserves. It doesn't really give any guidance on the use and the replenishment of those reserves. I think that's something that it would be sensible to establish a policy on. I think if we had policy guidelines that said, for instance, some level of economic activity, some reduction in economic activity at some level, at that level we suggest that's when it's permissible to use the reserves, the budgetary reserve. Obviously the disaster reserves, we'll know when those need to be used. But I think for the budgetary reserve, it would be good for the full council to establish a policy on that. And of course, future councils can't be bound by that policy, but at least put some thought into good guidelines on when reserves should be used and how they should be replenished. And I think, Mr. Samario, in support of that, before we bring that to the council, it would be very helpful if we could see, for instance, there was a council work session on October 17th, 1995, when the decision was made to go forward with this, or at least the discussion of that happened. It would be interesting to see the agenda reports from that time, from that workshop. Also, the November 14th, 1995 meeting when this resolution was adopted, any supplementary materials from that. And also, it would be good to see the history of these reserves from the inception of this policy to the current date. How were those reserves accumulated? When were they spent? For what purpose? I think with that background, we can have a productive discussion at the full council.
Just to make sure, since the reserves were established,
Exactly.
the use pattern. Okay.
Right. Mr. White, any further thoughts?
Yeah, I mean, it was just, I remember when I was sort of getting ready to run for council, I was looking into the whole idea about the reserves and looking at the bar chart of the reserves increasing and then starting, was it 2005, 2006, somewhere in there, starting to dwindle. And that then we're now in, we get, and the reason I raised the golf fund is that this is kind of like a laboratory of what worst case scenario is. And so how can we learn from that? How can we translate those experiences into the city as a whole? I think we've done that with the water and wastewater funds. That's an area where and even the vehicles, all of that vehicle management activity are areas where where the city has changed direction to some degree and been more forward thinking and more thinking more strategically in the long haul. And my hope would be that we can get those forward-thinking ideas that are planted in some of the parts of the city, bring them up to, as I say, some policies that were pretty darn good to begin with. It just felt like this was, as I recall, I'm even thinking that pre-95, that the city might not have had those reserves there, and that then the accumulation occurred per those resolutions, and there really was an effort to hit those targets. So how do we true up that effort so that going forward, councils are at least reminded to, okay, this money has a certain purpose. For example, and I think go back to the golf fund, the fact that the general fund lent the golf fund the money sounds right to me. So, okay, that's an investment that the commitment is being made, and it could even see if in these circumstances a a restructuring occurring to that loan, if in times all these awful things happen, then okay, that you get a lot more years to pay it back. But that's a commitment. Presumably that loan was made when consistent with the general fund reserve policies. We just look, the look is taken at the whole city system, and that investment is made. Makes sense. But to go into disaster reserves to put in new bunkers, and I appreciate the safety is another issue that, again, it's a big one. But trying to keep those disaster reserves for disasters is something I'd like to see, as well as the economic downturn money, have those boxed in going forward so that at least a stronger look is taken than I think was taken using the money from 2005 to 2010.
Okay. So, Mr. Samario, I think we'll be talking with you about getting something like this on a council agenda. Mr. Armstrong, do you have something to say about this?
Yeah, I thought I'd give you a couple observations since you have a little time.
Sure.
One, I think when you look at the reserves, I think where we really built them up was in the last half of the 90s when we almost had a kind of a dot-com, increase in revenues. And also, I think at the time we were much more conservative in our revenue estimates, and the budget was there was basically we were for there probably 3 years we ended up $3-4 million surpluses in the general fund, and they built up the reserves pretty quickly, and then we got above policy, and then quite honestly I think because we were above policy, we had a lack of fiscal discipline in terms of a lot of expenses. One of the big challenges for us was labor negotiations. We would budget a certain percentage during the year, and then for one reason or another we granted a wage increase that was in excess of what we budgeted, and we'd go in mid-year and basically say we're going to have to pay for this out of the reserves because the money wasn't budgeted. And I think when you're looking at crafting, it's not just economic emergencies, but how do we deal with that issue? Because in fact, in the past, we didn't even used to budget for wage adjustments. We would say 0, and we'd wait till the council did it, and then we would put it in, or we would, make some rough estimate. We didn't even start budgeting for wage adjustments until, I think, 2002, 2003, and so that was one of the dynamics that I think hit us pretty hard. The other thing in terms of as you go forward, I would encourage you at some point, I think that the Finance Committee may want to spend some time, get the council's input, and then bring back here where it's easier for 3 of you to kind of then go back to the council and recommend a policy. And I think we've heard council talk about wanting to look at the policy now for 5 or 6 years, and we really haven't spent the time we need to. And I would encourage you at some point that the Finance Committee really come up with some recommendations to the full council, get their input, but I think it's important that we kind of do the heavy lifting in this group and then give the council the benefit of your thought, and you can spend more time on it, and maybe it's a little less political environment when it's in this forum. Sure. So that's just a suggestion for you. And one last thing, I think, one of the thoughts I've had in thinking about this is we, about 5-6 years ago, we started, because we were ending up with pretty significant under expenditures every year, we started budgeting for that variance amount, where we actually say, okay, we're going to do a little better. And that took a little more of the fudge factor out of the budget, and we now are a lot tighter. And one of the things I've thought about is that we need to get to a point relatively quickly where we take that out of the budget. We no longer budget the variance, and then that will help you get a surplus every year. And one of the things I've thought about is once we get a certain point, we take half of that, we use it to pay back the reserves, and the other half we start funding general fund capital, and because that's another area where we're way underfunded. And then the other thing, just as you look at this, I think, and the way I've looked at it is, it's not as bad, I think, as folks want to make it out to be in the general fund, because a few years ago, for example, that self-insurance fund, where we this year have a surplus of $4 million that we're rebating, not that long ago, we had a negative in the self-insurance fund of $3 or $4 million that we never showed as part of the general fund reserves. Likewise, we had no fleet reserves, and we were not showing. And so now that we have those, we don't show that as a part of it. Now, some of those are are from the enterprise operations, but some of those are now general fund reserves. So in some cases, and also in the facilities, we have reserves there now that we didn't used to have. That intra-city ICS, and also even in information services. So those are amounts that now we don't count towards those reserves, but when we had the reserves above policy, we didn't have those amounts there. So it's not quite as bad as it looks, because we've actually now have some other places that I think are legitimate where we've put money aside that in the past we would have gone to the general fund to look for those kinds of things.
Good point. Thank you, Mr. Armstrong.
Well, don't go away. Because I think that's my intent would be to break open the issue and see what we can do. I mean, again, this is this is real world stress testing that we're doing now, and how can we learn from that and do better going forward. So, and I know that Mr. Armstrong, we've heard, for example, the whole reduction in accidents and losses that area. Mr. Samario mentioned. Well, those are things that have been accomplished here over recent years that are almost like establishing another form of reserve. And I look at this and I go, well, how about the whole internal service fund? Should there be policy stuff in there? And I would be looking to you to recommend and make suggestions. Again, we may not get there for chunks of time, but I, for example, do recall when I was working in the county fire department that there was no reserve for 32 fire engines, all of which were 20, the average age was 15 years or whatever, and that was an unfunded liability. Well, how are we doing in that area? Should there be a policy line for those machines, which are, that last ladder truck was $1 million or something? Well, so times however many stations we have, 7. I don't imagine the engines cost $1 million, but they probably cost $500,000, something like that. So, how are we doing in creating those reserves as well? So, just recommendations that you can make. That again, targets that we may not hit for a long time, but that we can leave just having done the work. So I'm looking for your guidance there to true up and to do better now that we're experiencing this real world stress test.
Okay. Ladies and gentlemen, I believe we're adjourned. Thank you.